had great, let's say, fintech businesses or great supply chain businesses. For the last 10 years, blockchain had been out of bounds for them. That was something that as soon as you touched blockchain, you got sued by the SEC. As soon as you touched blockchain, investors, would throw up their arms and get concerned about regulatory clarity. For the first time, because the entire industry and the entire country is getting clarity, many of these publicly listed companies are raising their hands and saying, we actually would love to get involved, or we already have these products, and we'd like for us to express our interest in this technology. And so many of these companies that you wouldn't consider blockchain companies are becoming blockchain companies, and we call them applied blockchain companies. And a second thing is also happening, which is many of the companies that were private core blockchain companies, these are pure play blockchain companies, are also going public because of that clarity of regulation. And so we see our universe expanding. And in the past, if we looked at our universe, it used to be just public digital assets. And even though there were more than 100,000 public digital assets, the names that passed our adoption criteria were almost always like fewer than 100. And then once we actually dug in and like looked at the individual businesses and made a thesis around them, there were almost always less than 50 names. And so what would end up in our portfolio, we had to be hyper concentrated in a few names because these were the only names that we found from the 100,000 that passed the criteria and passed our investment process. What's exciting about now is, let's say our criteria, one of our base criteria is we want you to show us 10,000 daily active users. That's one of the base criteria. There were very, very few companies that could pass that in the pure public digital asset space. But in the public equity space, there's actually a much larger group of companies that can pass that. And then as you go down, you can add more and more companies to your overall investment universe. I'll let Richard talk about this if he'd like to add anything, but I can pull up one of these companies as an example in the meantime.
Yeah, I would just add that yeah, there's been many IPOs, such as Coinbase in 2021. That was kind of like the big one. There's half of a dozen that we're actively tracking and monitoring that we're excited to come to the market in the next 2 years. And there's also some other blockchain companies that maybe they de-SPACed and it kind of came up too hot to the market and then had their prices fall. Maybe they traded on a over-the-counter exchange or something like that, and those companies are now in the right environment to position themselves to get uplisted to proper established American exchanges with full liquidity and the ability to be included. And these are actually profitable companies, and you might not know this, but a majority of the companies that are public are not profitable. There are several blockchain companies that are profitable that are coming to the market. So we're pretty excited to add a select few of them that to our portfolio.
Yeah, that's right. And it's actually going back to our roots. We always wanted, even within the digital asset space, to look for the most sustainable, most like long-term sensible businesses. And we had very limited options. And that's why if you've been a partner with us, you know that we had very concentrated positions. We had to have concentrated positions. And instead of going downstream and getting deeper and deeper into illiquid names, we wanted to stick to largely a liquid portfolio. And so public equities fit that quite well, where you can stay liquid, but now you're going into very good, sustainable, fast-growing businesses that are applying blockchain to their stack. And so if, let's say your criteria was, I want a blockchain company or an applied blockchain company that has more than 10 million daily active users, your world of blockchain companies would shrink from 100,000 digital assets to maybe 5 that would fit that criteria. But in the public markets, there's companies like Nubank. Nubank is largely focused on the South American market, but expanding beyond that. But they have gone from about 30 million customers since they went public to about 114 million customers in a period of about 4 years. And they have these very interesting blockchain products that they've been expanding and pushing. But they are, in our opinion, one of the fastest, if not the fastest growing fintech company out there that is now applying this technology to their stack. But underneath the surface, underneath all the noise, they're just a fantastic business. The KPIs, I think any CEO would kill to have KPIs like this that are just, so consistent and so positive over time. And yes, people are paying attention. The analysts are saying, the growth numbers are pretty incredible, 30% CAGRs, 25% CAGRs. But because they're a South American business, there has been, you can still buy them at very, I think, attractive valuations. Price to sales is less than five, price to earnings is less than 30. And so we like businesses like this. We like businesses that are, growing the underlying adoption, the same thesis, but for a variety of reasons are misunderstood by the market. And so these are the types of companies that we are adding to the portfolio. And the goal is that over time, as the two markets, kind of go up and down, we're able to make these decisions comparing both sides. So if there's a public digital asset, let's say like Solana, that's worth 100 billion, and then there's a publicly listed equity like Nubank, let's say also worth 100 billion, for the first time, we're able to now put them next to each other and make the decision of whether the best expected value from here is going to come from Nubank or it's going to come from Solana. But the portfolio is going to continue being totally liquid. That's going to be the focus. But if we can find a better expected value while staying liquid in the public equity markets, then we want to explore that. And so we've already started investing at least some of the capital into this theme. And so you'll start seeing those as the statements go out. But the goal is over time to reduce the concentration in a few names because those were the only names that were growing in the pure play blockchain names and start to put that capital towards public equities that we feel have the best expected value here on forth.
And
Yeah.
just to add, some of these public companies, they've been around for, some of them are quite established, been around for a while. They wouldn't have met our criteria a couple of years ago because they just weren't doing things with the blockchain. But, we're getting announcements like, for example, PayPal. That sounds like an old, boring name that's been around for 20 years. This year they're seeing regulatory clarity. They've launched a stable coin, I believe it was last year. And this year, their goal is to get 20 million merchants to use their PayPal dollar stablecoin. This is like a couple of new product lines that no one's paying attention to that could inflect their business and increase adoption dramatically. And we've been talking about stablecoins for years. It's the fastest growing, kind of sub-industry trend within blockchain.
Yeah.
With a very, very obvious use case.
Yeah, and they have almost 400 million active accounts. So a company like that turning on stable coins or turning on blockchain services, you get a level of adoption that you've just never seen before. So we actually have a question here. Which fund will invest in public equities? So we're actually considering public equities across the funds. For our partners, they know that we have two strategies, which is the opportunity strategy, which is a later stage kind of scaling businesses strategy. And then we have the Genesis Fund strategy, which is earlier stage. We're going to consider equities for both, but they're going to be different in many cases because there's going to be earlier stage blockchain companies or applied blockchain companies that will go into the Genesis Fund. And then there's going to be later stage companies like PayPal that are obviously not at that same scaling path the way that maybe a new bank is. So we will put equities, public equities in both portfolios, as long as the expected value to us makes more sense than doing the pure play digital assets. Yeah. Good question. So yeah, so go ahead. Go
I'll
ahead.
just answer the other question in the chat, which is about stablecoin use cases.